Good evening. Today is Monday, February 28th, 2022. The time is 6:13 p.m. and this regular meeting of the Romulus Community Schools Board of Education is called to order. Madam Secretary, will you please call the roll?
Wester. Present. Terrell. Present. German. Present. Kennard. Here. Piles.
Here.
Evans. Present. Mr. Bergeron is excused.
We have a quorum. Please rise for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Tonight, we have a heavy emphasis on finance. We will be receiving our audit report. Mr. Clark is on his way here, so while we wait for him to arrive, Ms. Fryer, if you can come give your finance report, thank you. Well, I guess, I'm sorry. We could do it. I'm sorry, Ms. Fryer. We had a presentation first of the audit, but then after that's public comment, so we'll just go ahead with public comment. Thank you. Okay. I mean that's fine. We can do that. And that's fine. I just didn't want, if the board, no one on the board has any issues with that, then we will do public comment then after the audit. Okay. Ms. Fryer, the first time was a dress rehearsal. Now you're up.
Can everyone hear me? Is that better? No?
Okay, I'm sorry. Mr. Cooper, is this screen able to come back some so this side of the board can see? The presenter.
Can you guys hear me?
Yes. Thank you.
I don't know how to make this taller, so I'm just going to launch my singing career here. That's it? Okay, that's all right. I'll maybe use this one. Sorry, Coop. Okay. Well, good evening. I'm Shelby Frayer. It's great to finally see everybody again. I've been watching you guys via YouTube here now for a couple months since I've been with the district. So I'm excited to be here tonight and get into some of the finances. We did have thank you. We did have the audit up first tonight, primarily because we wanted to take a look at the finances from a history level. I'm just going to hold it because this is way too short. Okay. So since I've been in the district here, it's been about 2 months, like I mentioned. The majority of our time from my team has been spent looking back at last year's finances. So we're going to get into kind of the timeline of how that all works. So as it relates to the budget for this current year is what we're going to present tonight, the budget amendment. Where should I aim it? Great. So that being said, everyone knows our fiscal year here is July 1 through June 30. So this just outlines, from a calendar year perspective, kind of where we ought to be right now in the budgeting timeline. You'll see our audit was late this year. We should have had it to the state by November 1st. We didn't get it turned in until I believe January 27th. So what that did for us was delay our state aid, but also our finances for this current year. So what I mean by that is in this phase here, can I move around? Great. In this phase of our budget, can you guys see if I come over here? We submitted our audit late. And what that does for us is it kind of puts us behind the 8 ball here as it comes to budgeting for this current year. as well as projecting out for the future year. So what typically would happen is the district would submit their audit in sometime in September, understand where they ended the prior fiscal year in order to start the current year that they were in. So when we start doing our budget planning for this particular year, we don't know for sure how we're going to end, and so that's why we do mid-year budget amendments as we get more information. So since we were delayed about 3 months, this current fiscal year hasn't had a lot of attention. We've been spending a lot of our time cleaning up last year to get our audit done in time. So all that means is right now this budget amendment is with the best information that we have to date, knowing that we've spent the majority of this current fiscal year working on last. So I sound like a broken record here, but all that to say, I want to put a lot of caveats into this budget amendment that there's going to be additional changes coming as we learn more and more information about our finances. So right now you'll see we're presenting here our mid-year budget amendment, and we're headed into our next phase of budget planning. And we're going to talk a lot more about that. Board policy says that we have to have a budget to you guys by June 1st. So we're gonna hold to that. So we've got a lot of work to do between now and June 1st. Any questions on the timeline? Not yet, okay. This is just a quick snapshot. So the auditors, again, are going to go over into much more detail about our balance sheet and our net position and all those great things. These are the things that I look at when I come to a district, so I know where we're at and where we're headed. So this is just a quick snapshot of our main revenue sources. So as you guys know, we receive 4 different types of sources, local, state, federal, and what we call other or inter-district funds. Our largest source of funding here is state sources, our state aid. It's about 44% of our overall revenue. After that would be our local sources, our property taxes that we receive, along with federal sources at about 19%, and then other sources about 4%. So total revenue right now is, what we're proposing is just over $33 million. This is just a quick, again, snapshot of our current expenses of what we're proposing. I know you guys had spent some time working with IADEX before too, and they have a lot of more detailed information. This just shows that we're spending the majority of our money here on basic programs, teachers and salary, which we obviously know is the right way to spend dollars. This is a quick snapshot here of our enrollment trend. I pulled this data from what's called the 1014 bulletin that MDE provides every year. It has a bunch of information. You can compare district by district how much folks are spending in transportation or average salary costs or anything that you want to know. It's on the 1014 bulletin. This is where this data came from. This just shows year over year, the district loses about 133 pupils on average. There were some anomalies here, it looks like in 2019, 2020, but that was kind of the one year. If not, it's been around 100, 125 on average. And at this rate right here, if each student's roughly $8,000 or so per pupil from state aid, if we're losing 133 a year, it's about $1 million. So we're losing at a clip of about $1 million a year in students. This was pulled right from our audit. This is our fund balance. This just shows what was originally projected for this current fiscal year, where we actually ended, and where we're proposing to go. I'm going to spend a little bit more time on this one here as we get going. But kind of the key highlights here is our audited fund balance, because I've heard a lot of folks confuse the dollars with the percents and call the dollars the percents and vice versa. So we currently have $5.5 million in our fund balance. That's a dollar value, which equates to about 17% of revenue. So it's a 17% fund balance. The state and MSBO and others will tell you a healthy fund balance would be between 12 and 15%. So you can see right now we're in a good sweet spot. We're not too high, we're not too low. We're in a pretty good spot right now. And I will say that's because we received so many one-time grant dollars in these last couple of years with the COVID dollars that we've received, which has kind of inflated our overall net position or our overall fund balance. So I know we're going to talk a lot more about this in the coming months here, but as it relates to budget, we've got a lot of work to do. And all I can say is the amendment that's before you right now, the folks on our team have gone through fund by fund, function by function, account by account, trying to clean up as much as we can and place either salaries in the appropriate codes or activities that were occurring in the wrong code or the wrong fund and try to get those things cleaned up. What had happened this last fiscal year is, I'm not sure who prepared the budget or what that process was, but it appeared that they took the general ledger activity of what actually happened in the prior fiscal year and then just rolled it over and called it this year's budget. And so it wasn't a really thoughtful budget as far as what was actually happening in the district. So things like athletics, for example, where there wasn't a lot of activity due to COVID, all of a sudden didn't have a budget for this year because there was no activity. And that's what got kind of plugged in for this year. So we've had to go through and kind of clean up a lot of those things. So we went through, line by line and started projecting out over like a 5-year trend, trying to come up with what we think it ought to be based on prior year's activity prior to the pandemic. So if we're looking right at the actual budget amendment here, it's a 2-page document that should be in your packet. Does everyone have it? So this shows in here, there's 4 different columns I'll point you guys to. Sorry for those who can't.
I'm sorry, Ms. Frye. Does everybody have that?
It's in your regular package, it's page 24. Towards that, it's in, yeah. It's right behind the action sheet, it's right there. There you go. Yep, that's it.
Apologize for that, thank you.
Oh, you got it? Okay. So I just want to point out really quick, this is the document that's up for approval tonight. This is the actual budget amendment that would go, once approved, or if approved, into our accounts here. Just going across, we just break it down by, activity year to date, the original budget. Notice we have GL in here, because that's essentially what it was. It was the general ledger rolled over. This is what originally was approved for the July 1 activity. The adjustments that are being made, and then of course the new proposed values of each of those funds and each of those accounts on the right-hand side. So we're proposing overall revenue of about $33.4 million. We're proposing expenses of $33.2 and adding about $250,000 to fund balance at the end of the year, bringing our fund balance to about $5.7 million. I will tell you, every day we're uncovering new and fun things that people were charged to the wrong grant or the wrong, whatever it might be. And so we're really trying hard to clean those things up. But if there's a dozen people that are being charged to the general fund that should have been a grant or vice versa, we're going to have some pretty large changes here as we go and we continue to clean up the books for this current fiscal year. So like I said, this is the best information we have to date to put forward this amendment. But this brings us to a much healthier spot in our fund accounting so that as folks are trying to purchase things or hire people, we're not hitting red flags and stops in our system that are putting down kind of roadblocks for people to actually get the things that they need to into the classrooms. So I know that was a lot of information and I talked really fast. Are there any additional questions on the budget amendment? Wow. Nothing, huh?
Thank you very much for that information. You said there were 17% revenue. What is the percent that is not one time out of that 17%? Do you know?
So it's a little bit hard to take away because if you remember, so COVID started in March of 2020. So the fiscal year would have been 2021, which was the year that was audited. So a lot of the funds didn't make it into that fund balance just yet. However, a lot are budgeted into this year right now, or this actual proposed budget for fiscal year 22. And if you remember, so our fiscal year, to complicate this even more, our fiscal year is July 1 through June 30, and the federal grants are October 1st to September 30. So when the Department of Education makes grants available to us, we often cross multiple fiscal years. So for us, from a budgeting standpoint, it makes it even harder to know if we get the dollars in, are we going to spend them before June 30, or are we going to spend them into that next fiscal year? So we cross a lot of years, oftentimes when we budget for grants. So I would say in our overall 17% revenue, a lot of that was because of vacancies. We had a lot of positions that were budgeted that were never filled. And so we ended up having an overstated or basically less expenses than we originally thought we would for this last fiscal year, primarily due to the pandemic. But we do have now going forward into this current budget will be definitely inflated for these one-time dollars. I'm not sure if that answered your question. It's kind of a...
Yes, you did.
Okay.
It's broad, but I understood what you're saying. And so I guess my next question would be pertaining to the adjustments. And so I'm not asking for a detailed line by line item, but some of these adjustments, can you elaborate more in terms of the necessity of why these types of adjustments are taking place, particularly in, you might have mentioned it, due to the declining enrollment from the federal and state resources, but one in particular for me would be the pupil transportation and the inter-district. I mean, can you give us some more information pertaining to what's happening in there and where those transfers are going?
Sure.
I mean, because if you're doing a deficit adjustment in those areas, it's going somewhere else.
Yep, so without pulling this specific line for you, what we ended up doing was going through and looking at essentially the past 5 years worth of data, excluding the pandemic year, because that skewed our numbers so much that we kind of kicked that one out and said, yep, let's look at the actual activity that the district had for the prior 5 years to help us project what we think we're going to do this year, as well as what we think we're going to end up at, so that we can put this into the amendment. So this particular change, especially for pupil transportation, we may or may not need to go back for those dollars and make it into a final amendment and put those dollars back. This was just our best guess on what we had spent in prior years prior to the pandemic happening. So basically our budget has been overstated or over projected in prior years. So we're trying to adjust it to what we think will end the year. Now that's not to say that crazy things can happen between now and June and we have to adjust that back. But right now, our best guess are based on prior year activity, we could decrease that budget by $298,000. Any other questions?
So we did the pre-pandemic for transportation. Have we considered the buses that we had talked about possibly purchasing this year? Where does that fit in if we're reducing our expenditures for transportation? What about buses?
Yeah, I don't have any new bus purchases in this particular amendment, so if that's something the district's going to do, we would put that back into that line and then make a final budget amendment and include those expenditures.
Okay, and then my other question for state resources, you had the original general ledger for 21-22, and you've reduced it. Can you tell me why it was reduced for $500,000?
Yep, so if you remember when they projected out revenue, they also assumed that FTEs would be the same because they just rolled everything over. So with our loss of FTEs, we're projecting about a $516,000 loss in state aid revenue due to loss of FTEs.
How many students?
Calculator, 8,000 roughly divided by, I'm not sure. I don't know what their original, wasn't based on much, but probably 50 FTE. Any other questions? I was trying to buy some time here for our auditors. I don't see them yet. I think they should be here soon.
Well, question. When we're looking at, and thank you for that, and thank you for preparing this in spite of, and as we go forward and have to tweak this as we, uncover funds and get everything straightened out and make sure things are charged to the right account. The good news is that we're looking at the 5.5 million, and that came up because an extra 1.2 was found somewhere, so we were able to bring that over. But I'm wondering if we pushed over almost $400,000 in salary expense, retirement, and everything over to ESSER 1, so we wouldn't have to take that out of the general fund. So it's good in theory because it increases our fund balance, but those are ongoing costs that we're always going to have. So if we removed that roughly $400,000 and paid from it from general fund, where do you think we would have been? And most importantly, how are you going to factor that in going forward so we're not blindsided a year from now with audit results?
Yep, that's a great question. I'm glad you brought that up. You'll notice here on our federal sources line, we have about $5.4 million budgeted for this year. And again, that's an estimate on what we think we're going to spend, so receive and reimburse ourselves before June 30. That may be completely unrealistic. We're still waiting for certain approvals to come through with the state. So a great example, and I'm going to get to your answer here. I'm going to get there the long way though. The consolidated app, typically when a district submits their consolidated app, maybe in the month of August or September, they receive approval back within 20 or 30 days, and that they're able to start spending that money for that fiscal year or that school year. We didn't get ours approved until, still not approved. I think parts of it are that we were able to roll over small portions that were in the budget from the prior year. ESSER 2 is approved, partial ESSER 3 is approved, and so that's extremely late. And so as soon as we're able to actually get the funds and make them available, building administrators now have to turn that around and spend those dollars before June 30 and receive all those products in hand, which is really, really tough to do. So to get to your question, our consolidated app is roughly $1.9 million. So our Title I, Title II applications are $2 million of that 5.4. So the remaining 3.5 is ESSER or COVID dollars that are going to eventually go away, right? So you're right. As we start budgeting things, permanent, long-term, fixed costs into grants that are going to go away, those people either have to go away, or those programs, or potentially absorbed into the general fund. And you couple that with losing 120 kids a year. Now we have a structural imbalance of $4 million, right? So
Right.
although it looks like we've got a lot of money today, that's not going to be the case tomorrow or potentially in years going forward.
So I know we were given information in October that because there was at least 400,000 that we used of COVID dollars for salaries, for retirement, for FICA, that if we had used general fund dollars for that instead of having the 5.5 million projected, I think it was projected 5.4 at the time, but instead of us having that, we'd actually have a deficit of $3,887,000. So we'd be looking right now, if we would have kept salaries in general fund where they normally are, we'd be looking at a deficit of $4 million. So knowing that we have the 13 million coming from ESSER and how it has to be allocated and things that we can shift from general fund to that, will you be able to develop a safe path for us so we're making up this actual deficit of 4 million that we don't see, so that we don't see it then when all the ESSER funds are gone?
Yep. So to answer your question, I mean, there's a lot of programs that are going into the ESSER grants. I think we still have 3 million left over in ESSER 2, and we've got another 3 million coming in to spend. So we've still got 6 million that have been essentially untouched or unallocated. It's just dollars that we know are coming to us over the next 2 fiscal years. So we've got some time to answer your question, and we're going to have to slowly start that process of bringing those folks back onto the general ledger so that as soon as these dollars dry up, we're not, kind of caught. So it will take some time to do that, but I think this team, especially in cabinet, we have lots of conversations about we can't put long-term costs into these one-time dollars. It has to be one-time things.
Yes.
So I think everyone's aware of that. It's just a matter of making those adjustments now over the next couple fiscal years.
Thank you. And Dr. Weatherspoon, if we can get regular updates, and regular would be defined by you and Ms. Fryer, I just want to make sure I understand the difference between us having a $5.5 million fund balance today, but without the ESSER funds, we would have had almost a $4 million deficit. That's a $9 million gap that we need to be monitoring as we prepare our budgets going forward and we allocate our spending. So I'm glad we have 17 today, the 17%, but the board's concern all along has been the false sense of security of COVID funds. So with that differential there, if you can just get us reports, and also just like you did today, not just the reports, but the explanation so that we have the understanding of it as well. Thank you.
Ms. Ferrer. So June 28th, we received an email, let me just pull it up, stating that for next year, we are projecting a fund balance percentage of 18% and 29% of unrestricted revenue. Can you explain to me how could we get this number? It says for the proposed final fund balance this year, we will be at 16% and 25% if we use unrestricted revenue. And then they're projecting 18 and 29 for next year. So How can we have such a discrepancy?
I'm not sure who sent that or what those numbers were based on. I think that the 18% fund balance was probably pretty close, but the 29 number, I'm not sure if they were stating that out of the total amount of fund balance, that a certain portion would be unrestricted, or what exactly they were coming up to. I don't know the 28, 29 number, but the 18 as a guess was probably pretty close. But I'm not sure about the other figure or what data that was based on.
Okay, thank you. Yes, it was from our finance director at the time.
Any other questions? Seeing none? Thank you, thank you for that, and for the explanations and the understanding as well. Yes, so, is there a motion there, or is it further down on the
Madam
agenda?
Secretary, move that the Board of Education adopt the presented budget amendment with a projected fund balance of $5,758,697. Rationale, finance consultant Shelby Freyer will present information on the proposed 21-22 general operating budget. The amendment was based on the audited 2021 ending fund balance, current state funding levels, and updated grant information. Budget implications, the general fund increases fund balance by $250,000.
I'm sorry, Ms. Evans. Moved by Ms. Evans, is there support?
Support, Kennard.
All in favor, say aye. Aye.
Aye.
Ms.
We'll
Terrell,
do
did
the
you
roll
vote?
call. Terrell? I'm sorry? Terrell is yes. Wester? Yes. Wester is yes. Kennard?
Yes.
Piles?
Yes.
German? Yes. Evans is yes.
Motion carries. Thank you. Next, we will go to public comment. Thank you all for being with us tonight. If there's anybody who would like to speak to the board, please fill out a paper and bring it up to Secretary Evans. Yeah. I think so. I think so. I don't know them, so I'm assuming so. I'll do public comment, give them time to get settled. So they're not just coming in and rushing. But, yes. Give them time to get settled.
Rita Hampton?
This one. Just want to tell the board, and they know who I'm speaking to. No matter what you do, no matter what you send to my house, no matter what you put in my mailbox, I do not trespass when I've been there 5 times before. You're not going to close my mouth. You're not going to stop the recall. It will continue on. And I do it proudly. If you think you can go on and continue to think that everything, just put it behind you and it's all over, you're sadly mistaken. You're going to have to atone for what you have done to this school district. You can't move on. And if you think you're doing a wonderful job, you're a legend in your own mind.
Thank you, Ms. Hampton.
Ms. Crystal Linton?
Good evening. I don't often get the chance to stand before this esteemed board. Hello, all of you. I am a Romulus resident. I'm a proud Romulus school district parent. I have many family members graduate Romulus, one doctor, a parent of two Romulus graduates. However, I was born and raised in Inkster, and what happened in Inkster frightened me. So most of you know my story. I went back there and I dedicated myself to the children of my hometown. And so I had to rush here now because I have an after-school program where I am trying to help them. And so I caught the fallout of what happened when the Inkster children were dispersed and many of them landed in your hands. I had the pleasure of visiting, and you haven't even gotten the presentation yet, I understand, so I'm up here prematurely, so you'll get a presentation in a minute of the MetaLab, and it is basically an entrepreneur lab. And I just want to let you know that the children that I have been working with for 7 years in Inkster would benefit greatly. It's for those that are at the bottom rung, those kids who don't participate in sports, that don't participate in band, that just kind of are falling through the cracks. And you guys know who I deal with. Who I had, for example, a group of boys who we just taught them how to do tie-dye at the church, and they just took those shirts and went over in their neighborhood and sold their tie-dye shirts, and were so excited that they got $10, $15 for their shirts. So I knew this was something that entrepreneurship, anything to catch their attention and point them in another direction. So I was pretty excited to go and see this entrepreneur lab, and I'm sure when you see the presentation, you might be just as excited as I was. So I'm going to probably just stop there because my heart is in what I do. The board already know, you've already met me, and you know I'll preach about those that I have a heart for. So I'll leave it there because you know my heart and you know my mind, and if I'm excited about something for those, you know it's pure. So I'm just going to leave it there. Thank you.
Thank you, Ms. Linton. Is there anybody else who would like to address the board before we move on? Seeing none, we have our auditors with us this evening for our audit presentation. Our audit was completed at the end of January, and so we have scheduled, I believe we have Mr. Daniel Clark and Mr. Dan Merritt with us from Raymond. Thank you for joining us, and the floor is yours.
Good evening. Dan is going to pass out the presentations for you folks.
Make sure your mic is on, and it has to be perpendicular.
Yeah, it sounds like
Yeah.
it's on. Okay. Is that better?
Yes, thank you.
Okay. So Dan is passing out the presentations for tonight. But as Ms. Pyle stated, my name is Daniel Clark. I'm the signing principal on your audit engagement for the fiscal year 21. And then today with me, I have Dan Merritt, who was the manager on the engagement for this year as well. So in front of you is a presentation, and it's the summary of both the financial statements that were issued, as well as the single audit, as well as the board communication letter. So if you want to follow along on these slides, slide 2 talks about just the agenda items tonight, one of which I'll just introduce the rest of the team members. We do have required board communications. We will talk briefly about some financial results and upcoming accounting pronouncements, and then open it up for any questions. But feel free as I go through it, if it's appropriate, to just ask questions as I go. That's fine as well. So next slide, Nate Balderman was the concurring principal. Tracy Kendall was the senior manager, and then as I introduced Dan already, was the manager on the engagement. Moving on to slide 4. So these are the required board communications. First and foremost, we did issue an unmodified opinion on the June 30th, 2021 financial statements. We issued that dated January 26th of 2022. These statements are due to the state on November 1st, so it was approximately 3 months late after that deadline. On the next slide, I'll talk about the single audit, but as far as the timing of that, but I'll continue on in this slide right here. We are asked to communicate any new accounting pronouncements that were issued during the year, one of which was GASB 84 related to fiduciary activities, which in essence moved all your student activity accounts into your special revenue funds. We're also asked to assess and deem reasonable the accounting estimates that are used by management. That includes depreciation expense, accrued compensated absences calculations, your assets held for sale valuations, and then those inputs and valuations that go into calculating your pension and OPEB. We assess those and deem those all to be reasonable. Number 4, we're also asked to let you know whether we encountered any difficulties in performing the audit. And this year, as I stated before, the audit was completed 3 months after the due date, so timing was a significant problem as far as being prepared with auditable schedules and support. In fact, we only started making significant progress right after the new year, so worked extremely hard with the consultant that you have here to get these done in the last couple weeks in January. We're also asked to communicate any material misstatements or uncorrected misstatements, and we did have several material misstatements that were noted, and we'll talk about that in a couple minutes with the specific findings that were noted. As well as then, we did notice that there were 6 material weaknesses related to the financial statement process, 2 significant deficiencies, and then 7 other matters for comment. If you want to go to the next slide. And then we also issued a separate opinion on your single audit. So this is related to all those federal dollars that you receive. We issued that report on February 14th of 2022, so just about 2 weeks ago. And that was, again, that second part of the audit that we complete. And that makes up, the opinion is on the schedule of expenditures of federal awards, which totaled about $7.2 million for the district this year. We are asked to communicate any findings related to that, and we did notice 4 findings that were considered material weaknesses and non-compliance related to the federal dollars that were received by the district. So we did issue a report on compliance, and we issued an unmodified opinion on 2 out of the 4 programs that we were required to test. We also then had a qualified opinion on your Title I grant and your Education Stabilization Fund, and that related specifically to the payroll finding that was noted as finding number 12 in the report, and we'll explain a little bit more about that in a moment. So with that,
Mr. Clark, I'm sorry for interrupting you. Would you please take just a moment and explain the difference between the qualified and the unmodified?
Yeah, so the unmodified means that there were no findings that would have resulted in us being able to provide an opinion on your financial statements or on your single audit programs. In this instance, a qualified opinion meant that there was something within our testing that made us unable to actually issue an unmodified or a clean opinion. And that was that finding related to there were some payroll expenditures that were not substantiated, that were material enough that we felt like in that instance, in that program, it wasn't everything in the program, it was specifically related to the payroll testing that we did related to that created that qualified opinion. Is that Dan? I'm going to pass it to Dan to walk through some of the findings here.
Good evening. As stated before, I'm Dan Merritt. I was the manager for your 2021 audit. I'm going to go through here all of our findings related to the audit, and let me try to categorize these for you so that you have sort of a frame of reference for what we're going to be talking about, because we do have, I believe, 19 different findings to go through. I'm going to try to go through them quickly, but hopefully if I give you a frame of reference, it'll be a little bit easier. So we're going to go through them in 3 sections. First, we have our financial statement findings. Those are going to be your material weaknesses and your significant deficiencies related to your financial statements. Second, we'll go through our single audit related findings. Those would be your material weaknesses and or significant deficiencies related to your federal awards grants. Finally, we have our management letter recommendations. Those would be things that do not rise to the level of either being a material weakness or a significant deficiency, but we still feel are important enough to be communicated formally to management and those charged with governance. So just to give you perspective of scale, material weakness, big problem, significant deficiency, significant but not material, management letter recommendation, smaller but still important. I would say the first three comments are sort of your financial statement house comments, right? So a good accounting department does three things well. It has a properly adjusted general ledger, it presents appropriate reconciliations, and then it presents adequately adjusted financial statements. Material weaknesses 1 through 3 are sort of addressing each layer of that house as not being adequately completed. Material audit adjustments being finding number 1, saying that between the beginning balances that we were provided with and the ending balances that are in your audited financial statement, there were material adjustments required to get from those beginning balances to the ending ones. Second material weakness, preparation of financial statements. The district relies on its external auditors significantly to prepare its financial statements. That's a violation of internal control in the technical instance. This is not necessarily uncommon, but it does represent an issue for the district, as in a good situation, the district will be able to present and prepare and review its own financial statements. Third, we have timely year-end closing and work paper reconciliation. That would be the sort of the second layer of the house we discussed earlier. The district was unable to provide adequately completed reconciliations in a timely fashion that would be prepared in a typical month-end or year-end closing process. Unfortunately, that was not the case in this audit. I would note that all three of those findings are repeat findings from previous years. None of this would be new. Material weakness number 4, preparation of schedule of expenditures of federal awards. This is sometimes known as your CFA. If you have over $750,000 of federal expenditures in a given year under audit, you have to have a single audit, and for a single audit, you have to prepare a CFA. The district was unable to prepare their own CFA and required significant assistance, which is a violation of internal controls. Material weakness number 5, segregation of incompatible duties. If you were to turn in your financial statements to the page related to this finding, you'd notice that this finding addresses several particular areas. It is repeated from the prior year. It is not new, though there are 1 or 2 things that were added. Issues related to incompatible duties for cash receipting, ticket reconciliation processes related to athletics and fundraising, independent review of payroll and payroll disbursements made, policies and procedures related to the independent review of manual journal entries, and documentation and procedures related to credit card disbursements. All of those were issues that came up during this audit.
Mr. Marin, I'm sorry,
Sure.
what page are you, is that from the single audit?
Yes, certainly. If you were to look in the single audit, be the findings begin on page 18 of the single audit report.
Thank you.
Yep. That would be page 22. So I wanted to point that one out in particular because it addresses multiple areas of your internal control issues. Page 23 would be failure to follow required bid contract requirements. This would be primarily related to your sinking fund disbursements. The state of Michigan requires under School Code 380-1274 that you have certain bid procedures in place, essentially your procurement procedures, right? Your purchasing policy saying what can we buy and what can't we buy, and how do we have to go about that? Especially related to sinking fund disbursements, you have to follow the state of Michigan's code and its ordinances in, I believe, sorry, I'm on the wrong page. 10 out of the 18 contract files we looked at, the district could not provide any documentation related to those contracts, so we could not determine if appropriate bid procedures were being followed. This finding is also repeated from the prior year and is not new for this year's audit. Page 24, accounting for capital assets. The district, again, had issues with their capital asset records. At the end of each year, the district's required to prepare a schedule of all capitalized assets. There was one, yes, I'm sorry, next slide. We're on to 7 here. There was one deficiency or one duplicate record that was included in the capital assets, which would have caused an overstatement of capital assets. This finding was repeated from the prior year. Finally, page 25, significant deficiency related to budgetary control. The board is required and does approve a budget each year, which is intended to control the district's disbursement of funds. However, during fiscal year 21, that budget was not properly entered into the accounting system, and therefore the amounts that were being used to disperse funds out of the accounting system were not necessarily the ones that were approved by the board, ergo your internal controls were not functioning to protect your assets, your disbursements in the way that one might expect. So that brings us to the end of our financial statement findings. Now we're on to sort of section 2, which is your federal awards findings. So page 26 would be the cash management finding for the child nutrition cluster, which is your federal student lunch program. You submit reimbursement by essentially saying we have this many meals and each meal is charged at a specific rate. When we go in to audit those cash requests, we say, show us your support for the meals that you claimed. And this year, like last year, the district was unable to support the requests that it had made throughout fiscal year 21 for reimbursement for federal student lunch. Again, this finding was repeated and was not new. I would note that in the prior year, the district was unable to provide any support for these requests. At least this year, the support was provided. Some of it did not agree. Finding 10, documentation and internal controls over disbursements. When you are paying money for a grant program, you're required to have internal controls in place to make sure that that charge or that cost is allowable under that federal program. One way in which this is commonly documented is for someone with knowledge of an approval authority for that grant to sign the disbursement. That's the most sort of basic way that you can say, yes, this is okay for this grant, this applies to this grant. In 55 of the 65 disbursements that we tested, there was no evidence of approval or that someone had looked at it to say that this was allowable for that grant.
I'm sorry, will you repeat that? What was that number?
55 of 65. That's finding number 10. Yep. Finding number 11, immaterial noncompliance for procurement, suspension, and debarment. For certain purchases that were made by the district, this would be similar to the issue earlier about contract files. We have to test procurement related to federal contracts and say, did you follow the federal guidelines for if you had over a purchase over 10,000, that would be the federal micro purchase threshold. If you had one over 25,000, that requires bids under the federal guidelines. Not all of the files reviewed by us during the audit provided appropriate evidence that this was taking place. Finally, the last finding, allowable cost principles over payroll. We review as part of the audit a sample of all of the payroll charged to the grants that we identify as major programs during the year. For a material amount of those payroll charges that we reviewed, there was not appropriate documentation that the correct payroll charge was made to those grants. Some of that was likely due to the documentation simply being missing, or there was turnover in the department. Some things could not be located, but there was not proper and appropriate documentation to support that those payroll charges were made in an allowable fashion. So I think we're moving on now to attachment A of the management letter, which is our SAS 114 communication. These are our recommendations. These are sort of the smaller issues, and that's why you see them noted as other matter. Yep, other matter, starting with number 13, interfunds. This is more of an accounting-related issue. There are interfunds which are sort of due froms in between different funds that's maintained by the district as required under GASB accounting standards. They've sort of been grossed up in different years, and they've never been netted out properly. When we do the financial statements, we net them out properly, but they're still sitting on the district system and haven't been properly cleared out the way that they should have been over previous years. Accrued health insurance reconciliations at the end of the year, you're required to do an accrual, usually for insurance provided through MESA, saying that here's the amounts we believe are related to fiscal year 21 that were paid in fiscal year 22. We believe that the amount that was accrued was within a reasonable range of what we would expect, but the appropriate documentation to prove that and to sort of show your work was not maintained as it should have been. Reconciliation and control over cash accounts. The district has a specific annuity account related to scholarships that is only reported on quarterly. the district was not maintaining control or reconciliations of that account or even really tracking the statements that were coming through. As it turned out, because there was only a very small amount of change in the account balance over time, it wasn't materially misstated in the financial statements, but it's always an important internal control that you maintain copies of all of your statements on a regular basis and reconcile every single account. So if that type of issue wasn't corrected, it could turn into something material in future years. Grant receivables, we noted that there were certain requests that the district made for money from Wayne Risa that did not agree to the underlying accounting records, specifically the ones from 2020. So we audited those 2020 balances. The district said, here's what we are owed from Wayne Risa. Then they went out and requested money that didn't always agree to the balances that were audited for 2020. It wasn't material amounts. They weren't significantly different, but we do think it's important that you go back, double check, make sure, hey, why did these not agree to what was paid?
Do you remember which funds those were?
Not off
Is
the
that
top
like
of my head.
our titles or our Perkins or our,
Not off the top of my
or
head. but
was
we-
it just across the board?
Yeah, there were a couple specific receivables. I can provide information
Okay.
on that. Yep.
Thank you.
We'll absolutely follow up on that and provide detailed information. Federal tax payments. No, am I not skipping a page? Grant receivables, federal tax payments. Yep, okay. Federal tax payments, the IRS issued the district multiple notices throughout the year about unpaid taxes. The district did go in and record these as appropriate liabilities in their financial statements. However, it's important that the district be maintaining regular communication with the IRS, making sure that these are paid in a timely fashion and not accruing late notices. The district accrued several penalties on these IRS notices because they weren't receipted in to the district office and then paid out in an appropriate amount of time. School bond loan fund deadlines, it was noted that this district missed a payment deadline for the State of Michigan School Bond Loan Fund. Because you refunded almost all of your school bond loan fund, the amount that you have remaining outstanding is quite small. So it wasn't a significant payment, but you really need to make all of your school bond loan fund payments on a timely fashion, otherwise you risk your future participation in the school bond loan fund program, which would be an issue if you needed to take advantage of that for future borrowing. Finally, career and technical education program. There was an investigation report during the year that specifically noted that there may be some issues related to the career and technical education program. We don't believe that any of the issues were material to the audit report. However, we do recommend that you assign someone responsible to go in, make sure they know what's going on with that program, and clean up those issues. So that's our quick run through of audit findings. I'll hand it back to Daniel.
Any questions on that before we move on to the financial aspect?
I'm sorry, I have one question because there's confusion. When you talked about the district receiving many letters from the IRS about payments that weren't made, and we had accrued large amounts of interest on that, we had heard that in the fall, and that I don't remember what the interest was, $80,000 to $100,000 or more. But then what we learned later in December was that actually those weren't past due. The IRS was giving us till the end of 2021 to pay those off. Obviously, these two pieces of information conflict. I'm not sure where the information came from that we had until the end of 2021 to pay it, but the board was told that. Does any of that, are you able to reconcile those conflicting pieces of information? A deferment? But if we were receiving penalties, it doesn't seem like we were within the allowable deferment.
That's correct. I mean, typically, if you're receiving penalties, that means you're past your deadline. We can follow up on that question, too, as far as to get some clarification. Anything else? Okay. So now we're just going to briefly go through your financial results, starting on slide number 9 on the presentation. So you'll see at the end of 2021, the district had just under $79 million in assets compared to about $77 million last year. So your assets increased just under $2 million. A significant reason for that is your cash and cash equivalents went up about $1 million or $947,000 due to positive results in your general fund, of about 1.2 million in net income. And then you had a quite significant amount of net capital asset increase. So the district added about $5.4 million in capital assets. Significant portion of that was to the senior high. I believe you had about $4 million in additions to the high school. And that was netted then with the annual depreciation of $2.7 million, which increased your capital assets by about that $2.7 million there. Next slide. And then the district at the end of the fiscal year had $134.7 million in liabilities compared to last year of $140 million in liabilities. So your liabilities did decrease by about $5.4 million. A significant portion or reason for that was your long-term debt, as you'll see, went down just over $6 million. There were two refundings this year. One that refunded the capital appreciation bonds, and then one, as Dan just alluded to, the school bond loan fund was refunded almost in its entirety. There was that small balance, as he mentioned, about $2,000 or $3,000 that was left on there. Next slide. And then assets minus liabilities is your equity or your net position, and that's broken down into three different categories. A big chunk of this is your net investment in capital assets of 18%. You have a little bit of restricted dollars, and then the largest portion of this pie is your your unrestricted balance is actually a negative $75 million. Most of that is a result of bringing those pension and OPEB liabilities on your books. So pension at the end of the year represented about $50 million in liabilities, and your OPEB was about $8 million in liabilities. Next slide. And then this is a picture of those different categories of your net position or your equity over the last 4 years. That top line is your equity in capital assets, which went from about 11 million to 16 million. That's a direct result of that payoff of that school bond loan fund. And then your restricted dollars went from 4.8 million last year to about $2.5 million this year. And then next slide. And then that unrestricted piece, as I was talking about, this is with and without the effect of the pension OPEB. So you'd see that top line, you would be in a much better position without those pension and OPEB liabilities, but you would still be at about a negative $25 million in unrestricted dollars.
I'm sorry, would you say that again and explain that?
Sure. So your unrestricted net position, it's entity-wide, so it's all your funds, and that's your assets minus your liabilities. And then that takes into account your pension and OPEB and all your other liabilities. So in here, this is what it's saying is your liabilities exceed your assets by these dollars amounts, excluding the capital asset piece of it. Next slide. So this is your income statement. So you'll see the entity had $47 million in revenue compared to $44 million last year, a significant increase, so about $3 million. Most of that, I will say, relates to that additional COVID money that you received. I believe you received just about $3 million, a little over $3 million in COVID related to GEAR, to ESSER, and then the PRF. You had a net income at your entity-wide level about $7 million. And again, that's the improvement based on the reduction of your OPEB during the year of 2.2 million, and then the general fund surplus of 1.2 million. Moving on to the next slide. So the next two slides are just, they graph out your major revenue line items over the last 4 years. That top line is your local dollars, so your taxes received. That continues to increase. You had 23 million or 23.2 million in taxes. That was an increase over last year of 22 million. That bottom line there are your state dollars. So your state dollars actually went down to about $15.2 million, a small decrease over last year of 15.9 million. And then next slide. And then your other two categories are your federal, and you'll see that top line went up significantly from 5.3 million to that 7.2. And again, I spoke to those additional dollars that you received related to CRF, GEAR, and ESSER 1 and 2. And I believe you received about $935,000 in CRF this year and $2.3 million in combination of GEAR, ESSER 1, and ESSER 2. And then your interdistrict went from 1.9 million down to $1.5 million. And then we'll just talk briefly about the general fund. You had $33.9 million in general fund revenue compared to 32.6 in general fund expenses. So you had a surplus of $1.2 million. So your revenue actually went up 1.8 from last year, and your expenses only went up 700,000, which caused that that surplus. And again, the significant reason for that increase are those COVID dollars that are a one-time thing, and that won't be reoccurring after the ESSER 1, 2, and 3 are up. And then the last financial slide is your coverage ratio, your general fund coverage ratio. So this gives you a picture of how many months are sitting in your fund balance in general fund. So slide 18. At the end of fiscal year 21, you had about 2 months or 17% in your general fund coverage ratio. I will say that excluding the COVID-related dollars, if you were not to have gotten that, your actual coverage ratio would have been as low as about 7% or 0.88 or just under 1 month of general fund coverage ratio. So you actually saw an increase in this ratio, but it was strictly due to those extra COVID dollars that you received. And then the last two slides are just some upcoming accounting pronouncements. A lot of these don't really have any impact on the district, but we will, the auditor will work with the district as these come applicable. The one that is applicable for fiscal year 22 is GADSB 87 related to leases. And again, that would just be collecting all the significant leases that the district has, and those now are presented on your balance sheet versus on your income statement moving forward. And with that, any additional questions?
Thank you. Thank you both. Are there any questions from the board? I have a couple questions. Oh, go ahead, Ms. Savage. You can go. You may go. I'm sorry.
So this kind of goes back to what Ms. Fryer was saying about the 1.2 million, and that some of these monies were found by positions that were not filled. So you're saying that some teaching positions were out there to be filled, and I'm asking a question. Teaching positions were out there to be filled, but they had never been filled, and so now we're taking the monies back. Are we going to allow that and put that into another area? Are we going to still allow for those positions and accrue them in another spot? I guess I want to know what are we doing with the monies that was scheduled for payroll that we found the 1.2?
So you'll see in your budget amendment how the original budget projected us to put another 1.1 back into fund balance. And we're making the adjustment to say, no, that's not true. We want to fill those positions. So,
Okay.
So part of it due to vacancies is part of it, and part of it is COVID dollars. But we're planning to spend those dollars this year, at least of right now, and only put $250,000 back into fund balance and try to spend those dollars so that we don't have this reoccurring problem again.
My question is, on the general fund coverage ratio slide, because of our COVID funding and because we opted to pay a lot of our salaries, about $4 million of salaries and retirement and benefit expense from our COVID dollars. Because of that, we ended up with a 17% fund balance. Did I hear correctly that if we had not done that and we were paying those ongoing expenses out of general fund, that our fund balance would have been approximately 7% with 1 month availability? And the reason I ask that, because if that is correct, we went nearly 3 months without the state funding, and we were one payroll away from not paying our employees. That's with our 17%. But without that extra money, a 7%.
Well, the 17% was at June 30th.
Right, June 30th, right? So that we had that, right, so we
Yes.
had that fund balance that we're able to draw from.
Yep.
But if we only had 7%, we would be looking at, after a month's time, we're not able to pay the employees
Without state aid.
who are there, okay. And then my other question is how does that, so state aid is delayed, and I do want to state that we don't lose it. It was just delayed, so we did receive the whole amount. But how so, if at all, does completing our audit late and having findings specifically related to federal dollars, how does that affect the district? Could we lose money? Could we lose federal funding? Would we be under just more scrutiny? Like, what are the consequences of, obviously, we don't plan on doing this again, but what are we looking at, or could we be looking at?
Yeah, so I would say on the state side, obviously most districts, especially ones that we work with, they comply with the November 1st deadline. I mean, that's obviously an important date. State aid is what keeps schools running. So to go any amount of time without state aid just won't work in most districts. So I would say that to be constantly on the state's radar, that you're always one of the couple schools in the entire state that is late, is obviously never a good thing to be scrutinized like that, especially a school district of your size. On the federal side, we have to submit your audit and all the findings up to the federal clearinghouse. So it's public access. We list the number of findings in detail and your audit report. Continued significant findings like this always brings additional scrutiny. Now, whether it would one day jeopardize your funding, of course, that's always a potential, especially with the number, not only the number of findings, but the continued repeat findings. So yes, those are always going to put you in a more scrutinized position and potentially in danger of losing those dollars.
Thank you, Ms. Fryer.
And to add to that, so because we were 3 months late in getting our audit findings back, that gives us less time to correct them for next year. So if we're going to end the fiscal year here on June 30, that gives us 4 months to clean up 19 findings.
Wow.
So it's really unrealistic to think that our team's going to be able to pull off all of that. We're certainly cleaning up as much as we can, but this time next year, when you guys are reviewing your audit again, or hopefully much sooner, we'll have some of those eliminated, but the chances of reoccurring again are very likely. So I just want to make sure we're all aware.
Yeah, and that's a good point. In fact, several of these findings, because they haven't yet been corrected, almost assuredly will be a finding for 2022.
So how do we get out from behind that 8 ball? I mean, obviously, so the year prior to this one, we had all the findings. Our audit wasn't completed until the end of January, beginning of February. We brought you in to do a pre-audit of those findings and found that they still existed. And so now we have those plus some new ones, and now we're looking. So how do we stop that cycle where we're able to get on top of it and stop having the repeat findings?
Yeah, so this is a multi-year process to clean up. Obviously, to get a clean audit, you're looking at not fiscal year 22, but fiscal year 23, and it's getting the right individuals in place in the finance department, in the grant management specifically, and making sure that they have the knowledge and the skill set to be able to monitor these things and to correct them, and then the controls that go along with that.
Thank you. Are there any other questions? Thank you both, Mr. Clark and Mr. Merritt, for being here, and thank you for this information and for presenting it in an incredibly understandable format. It is much appreciated. Thank you.
Yes, thank you.
Next, we are at the consent agenda. All matters listed under the consent agenda are considered routine in nature by the Board of Education and will be acted upon by one motion. There will be no separate discussion on these items. If any member of the board or any citizen requests discussion of an item, that item will be removed. I am so sorry. I didn't see that in here. Ms. Gowan, I apologize for, I don't even see. Oh, here it is, back under presentations. Blame it on all this. I would never overlook you. I apologize for that.
That is okay.
No.
Good evening, esteemed board members. I am very excited to speak briefly about updates on our Meta Labs. We've had some sobering data presented to us today, but I think the great news is Meta Labs I see as an amazing source of hope. Thank you so much. I'd like to start by just reading a Facebook post, and because we have such an outstanding IT department, we cannot get onto Facebook through our Chromebook, so Mr. Cooper has allowed me to read this from his phone. This is from Mr. Carl Diabru. He was with us last week when we went to Harper Woods, and here's what he had to say. Last evening, I had the esteemed privilege of traveling with fellow educators, administrators, and community stakeholders from Romulus Community School District to preview the Meta 24 labs in a neighboring community. If you are not familiar with the initiative, Meta 24 alters the current trend of traditional education and assists in revitalizing struggling communities. A Meta 24 Learning Center is a place where students not only learn essential skills and earn credits, but where they also proactively prepare for successful futures. So, I mean, that said that pretty well. And then as you heard from Ms. Linton earlier, the trip to Harper Woods last week was just absolutely amazing. And the students sold it. So, of course, Dr. Prince, you heard him present. He has a very compelling program that I have to say is batting 1,000. The program has had nothing but success everywhere it's gone. But I think for most of us who were there last week, it was hearing the students speak. We were in a fashion design room, and there were 2 middle school boys, and they almost pushed the teacher out of the way to say, let me speak about this program. And the word that he used was engaged, which is just amazing. So the pride that we saw with these students, with their products, the food, the fashion, the whole environment, it was magical. So, and they called it Magical Meta Night, so it just fit very, very well. We are continuing with our fact-finding mission, as Dr. Prince likes to call it. He just presented 2 weeks ago today. And so already within a week, we had the Harper Woods field trip set up. Next week, we will be sending some memos to the board very, very soon. Next week on Wednesday, we will be traveling to River Rouge to see some of their elementary classrooms on Wednesday. And then also on Wednesday of next week, the 9th, the 10th, and the 11th, we will have a group that will travel to Chicago to see his labs firsthand and to get some one-on-one time with the CEO, really look at our specs here in Romulus and see how we can make that amazing program that is batting 1,000, make sure it works perfectly here. So we also have a site visit tomorrow with Dr. Prince as one of his colleagues named Kahari, and we are going to be looking at the 500 wing in the high school, and we're going to be looking at classrooms in the elementary schools and in the middle school. So we are certainly moving forward with our fact-finding mission, and every step along the way, we just get more and more enthusiastic. So we intend on getting some feedback. You heard from Carl, you've heard from Ms. Linton. We'll make sure Sandy was there as well. I'm sure she has some wonderful things to say. So we'll make sure that we gather some of that information and what we're hearing from the public so we can share. But please be on the lookout, board. We'll be sending those memos soon. So if you're available to come to River Rouge with us next week, or if you're available for the trip to Chicago, we would absolutely love to have you. And we are just so incredibly excited about what these Meta Labs could do for Romulus Community Schools. We saw in Dr. Prince's presentation how the scores looked in Chicago prior to Meta Lab, and then we saw what the scores looked like after Meta Lab. So I am just really, really excited to see what we can do with this and bring back in 3 or 4, maybe even 1 year, and show you what all we've done. So really, really excited. Thank you for this opportunity, board.
Thank you very much, Renee. Are there any questions from board members on the Meta Labs or for Renee?
Do we know what time the visits are next Wednesday?
I believe it's going to be in the morning. I am waiting to hear back. Stacy is the director of the Meta Labs in River Rouge, and she is going to send me an itinerary on Wednesday or Thursday of this week, And as soon as I have that itinerary, I'll send it to the board right away.
Thank you.
Of course, thank you.
Thank you very much. Now we are at acceptance of the consent agenda. All matters listed under the consent agenda are considered routine in nature by the Board of Education and will be acted upon by one motion. There will be no separate discussion on these items. If any member of the board or any citizen requests discussion of an item, that item will be removed from the consent agenda and will become the first item of business under the report of the superintendent portion of the agenda. A, the approval of minutes from one meeting, February 14th, 2022. B, the approval of bills for payment as submitted by finance consultant Shelby Fryer in the amount of $1,861,790.52. And C, to approve the personnel actions as submitted by Human Resources Director Daniel Scott, the resignation of Cameron Egley, payroll and benefits coordinator, or contractor, effective 2/25/22. Is there a motion to accept the consent agenda as presented or amended?
Madam President, move that the Board of Education approve the consent agenda as presented / amended.
As presented or as amended?
Presented.
Thank you. Is there support?
Support.
Moved by Kennard, supported by Evans. All in favor say aye. Aye.
Aye. Can we please use our microphones while voting so I can hear? Thank you.
All in favor say aye.
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 Those opposed? Say nay. Motion carries unanimously. Next, we are at the report of the interim superintendent. Dr. Weatherspoon, the floor is yours.
Thank you, Madam President, members of the board. I think this mic is working because I pressed the button. Yes, there it is. I'm going to request a couple of things from the board. We need 2 study sessions during the month of March. There are a host of items, both fiscal and curriculum or academic, that we need to discuss thoroughly so we have a clear direction of what we want to do in terms of putting together the next fiscal year's budget. And I will work with each of you to try to find a date that will be acceptable as far as your calendars are concerned. But to give an example of what I'm thinking about, I've asked staff to give me the expiration dates of all of the services contracts that are expiring that need to be rebid. So we're going to be looking at transportation and other things, because I heard a question earlier about buses, for example. With the expenditures that are needed for new buses and things like that, I need to ask the board whether or not we want to go and extend what we have, or buy new buses, or what, because that is a big item. Our district depends on it, and we need to know what the board's thought process on this. With the, I think I figured out why this thing gets, okay. So we've all, on the curriculum side, for example, we have not mentioned things like special education. And we need to talk through several of the challenges that we're experiencing and the work that we need to correct some things that have accumulated in the district to keep us abreast of what is required of us by law. And one example is we are short personnel in several critical areas. We're going to try to advertise for those positions, but failing getting a permanent person, we're going to have to go with contracts. And some of this is challenging in terms of finding people who will be willing to work for us, both either on a contractual basis or as a full-time employee. So from my perspective, the children come first, and we have to provide the services for them. So whatever we have to do, I'm going to lay the options out before you, and we're going to be able to choose A or B. But the opportunity, there is no opportunity to say no. So I'm going to keep you or us in alignment with the law, and at the same time to keep a sharp eye on the fiscal situation of the district. With regard to next year's budget, we're going to ask the board, or I'm going to ask the board, what level of involvement do you want to have in the creation of the budget? And what level of involvement would you like to have from the public in terms of the expenditures, et cetera? Normally, you would say, what do you want to have happen in the district? And then the next question is, how much are you willing to spend for it? And that's going to be a critical question, simply because if you looked at our fiscal position, we have to start now and lay the foundation in terms of working out of a structural deficit. And today, several of you heard the trend analysis and projections. So I hope that churns in our minds about the work that has to be done and the priorities that have to be identified and funded. So with those two things, I think the most important part is to get an agreement among each of you about having 2 work sessions to work through some of these challenging issues. So those are my comments, Madam Chair, and we have some action items.
So between now and the study sessions and the decisions that will be made afterward, you were talking about key positions that are not filled that we need for our students who receive special services. In the meantime, is RISA stepping in and helping with that? What are we doing to make sure our students are receiving the services?
What RISA is doing is coming in and starting Wednesday of this week to review, beginning in our elementary schools all the way up through the high school, what we're doing, why we're doing it, and where we need to take corrective action. So we're not looking at any penalties or anything like that, but record keeping, identifying students, making sure that IEPs are up to date, making sure that the students who need services are identified, and we have a plan to address their needs, etc. So that is an outside assessment, if you will, that Wayne RISA has graciously provided for us, or providing to us, and we're working collaboratively with RISA to get this done.
Thank you. Are there any other questions? Okay. So moving on to the action items. The first is the annual independent financial audit. Dr. Weatherspoon, so if you want to talk about that, and then if there is a motion, we can open the floor for discussion.
I think, Madam Chair, you've had enough finances today, so I think you're ready for a motion, and I don't have that in front of me.
Thank you. Is there a motion?
Move that the Board of Education receive the audit report for year ended June 30th, 2021, as audited by independent accounting firm Raymond Robson. The rationale: Raymond Robson LLC, an independent accounting firm, has audited our financial statements for the year ended June 30, 2021. The audited financial statements is available on our website. The website is quoted. The Single Audit Act compliance report is also available on a website, quoted. The audit report/resolution is recommended on February 28th by the Raymond auditors. Additional details are available in the above-mentioned reports. Raymond's auditors, Daniel Clark and Dan Merritt, will give a presentation at this meeting.
Is there support? Support. Moved by Evans, supported by Wester. All in favor say aye.
Aye.
Those opposed say nay. Motion carries unanimously. Next, there is an action item for consultant services agreement, a supervisor of RECC, GSRP, Tracy Richardson. If you'd like to tell us about that, please.
Tracy has agreed to serve as the interim director until we find a permanent person for that position. The rate is $2,000 a week, and it's effective immediately until we find someone to fill the job position. We have several positions that that are vacant that we're recruiting for.
Is there a motion?
Madam President, recommended motion move that the Board of Education approve the consultant services agreement for services for Tracy Richardson as supervisor of RECC GSRP at a rate of $2,000 per week for the time period of February 28th through July 1, 2022, or until a permanent replacement is found as already stipulated. The rationale, it is proposed that Tracy Richardson continue to be contracted as a supervisor of RECC GSRP. This proposed agreement shall commence on February 28th, 22, ending as earlier stated, Friday, July 1, 2022, or until a permanent replacement is found. Please refer to the agreement for additional details that's in the packet. The budget implications is a grant/GSRP.
Support.
Moved by Kennard, supported by Wester. The floor is open for any questions or discussion. Okay, I just want to, I remember this position came before us, and we were told that there's specific licensing that needs to be possessed by whoever is over our GSRP. So, and I know we had a couple part-time people, so now we meet those requirements. He's got the licensing, and this is what we're paying for. Otherwise, we would not be able to operate our GSRP program. And then secondly, this is funded from grant dollars from GSRP, which is a self-sustaining program.
Correct.
Seeing no other comments or questions, all in favor, say aye. Aye.
Aye.
Those opposed, say nay. Motion carries unanimously. Next, we have a report of the Director of Human Resources, Mr. Dan Scott.
We have two positions that we need to post for. One is an administrative assistant for myself, and the plan here is to find someone who has the ability to be trained so that hopefully we will be growing our own human resources director within our own midst by hiring them first as an administrative assistant. So there have been some changes to the job description based upon that rationale, and so that's why it's before you again. Okay? Secondly, there is a proposal for secretarial service to be shared because there is a load of it that both Bill Garland and David Cooper have, and this is one position for the two of them. They both were involved in putting together the job description of what their needs are, and that is what you see in front of you as well. The third action item is we had a resignation by our Director of Special Services, Angela Broden, and to accept that resignation.
Thank you. If there's a motion for the administrative assistant for HR,
Madam President, recommended motion move that the Board of Education approve the posting for a vacancy of a Human Resources Administrative Assistant, granting permission to publish the posting. The rationale, the presented job posting/vacancy announcement is submitted for the board consideration. We are seeking board approval to post this position at an update salary range and with updated duties. The salary range is between $45,000 to $52,000. The budget implications will be general fund, and the job exhibits is in the board package, which is the job posting, the vacancy announcement for the Human Resource Administrative Assistant, March 1st, 2022 date of posting.
Support.
moved by Kennard, supported by Evans. Are there any questions or comments?
Date of salary, is that an increase or a decrease, and are the responsibilities changed?
I'm sorry, is the salary an increase or decrease, and what was your other question?
And are there added responsibilities to this position?
As far as the salary goes, it is an increase. And again, the reason for it, or the rationale for the increase, is that the individual will be expected to do more and be trained to do more, so that they can hopefully move into the position of Human Resources Director. There are a number of things that specifically that I have in mind that I am not sure that the administrative assistant prior did these things, that I have had administrative assistants in the past in Human Resources do them, things such as the rep report, which is twice a year. There are other things having to do with FMLA, but once again, this is all training for the individual to then be able to handle those things, so that as they move into the Director of Human Resources, hopefully, that would be the outcome, they would have the training to be able to step into that position and have the experience.
For clarification, so what you're saying is that some of the responsibilities that this person will be performing is just not at the status quo in terms of what, which is at administrative, but more at a higher level or degree in terms of what they have been accustomed to doing, whether they did it or not. But you're looking at responsibilities that are greater than at a higher level, such as that may cross over where confidentiality things are needed, and some more technical or complex administrative types of tasks. Is that what
I would say more technical, yes.
More technical. Okay.
I would say the confidentiality stays pretty much the same, due to the fact that anytime an administrative assistant works in HR, they definitely get to know the details of an individual's life just through the background checks and things like that, that people don't normally have access to.
Thank you.
With the rep report, that wasn't part of the job description prior?
Not that I am familiar with at all,
No.
in looking at the job descriptions.
Okay.
And that's all I had to go on, because there's no one around that really knew what the person did.
Mm-hmm. Okay, thank you.
I'm
I have a
sorry?
quick question for you. So at this point, currently, you're the only one that is working HR at this time?
I am the only one working HR and pretty much benefits and payroll.
Thank you.
Sorry, I apologize for that.
So so I have a question. What you're doing is you are basically doing an employee in training to
Yes.
take over the leadership director position of HR.
Yes, I believe that the stability of the district is dependent upon us having someone on that then can stay on once I leave.
Someone to go with the district.
Yes, as opposed to bringing someone new in. A number of the issues that I have encountered since I've been here is due to that fact that there is no one with history here, and therefore I keep finding things that I have to take care of. I don't know why they happened, but they've happened and they need to be taken care of, kind of like in your finance area.
So, oh, I'm sorry, Mr. Chairman.
So currently, you're working HR, payroll, and benefits.
That's
There is
correct.
nobody else supporting you at this time. And do you have the other positions open, like?
They're posted.
Okay.
So I would like to share with the board, on August 3rd, 2021, the board approved a hire for an HR administrative assistant, and that contract value was $45,677. So that is aligned with what it is now, but what we learned afterwards is that that person was not qualified to do what we thought was an HR assistant, but was working the front desk. So keep in mind, if that's what we just hired in August, 45,677, now we're putting somebody back as the HR assistant, right-hand person to our HR director. So a range of 45 to 52 is very conservative for that. And as far as the rep, in the past, as we've had turnover, we have had to pay stipends to people in the district as well as outside of the district to do our rep, our FID, so many of these. So this salary range is a deal for the district, if we can get someone.
And I will say that in doing some research on my own, other districts right now are paying, and I'm just letting you know where it is, close to $50,000 with increases, I have been told by those districts, going up to $51,000 come spring.
I just have one more question in regards to, I'm kind of like Ms. German right now, as it relates to payroll. So you're doing HR and you're running our payroll? That's one of the positions that we have up, posted, right?
It is
For our
posted.
Okay.
It is posted. And maybe I need to clarify the payroll issue here. I interact as a liaison between myself and RISA, who actually has payroll support, I guess I would say, which basically means that there are days where I have at payroll time, which starts on Monday of next week and will go until Wednesday and possibly even Thursday. On a daily basis, I have anywhere from 10 to 15 phone calls back and forth with the people at RISA and then also with EduStaff, because I'm also providing the spreadsheet, and that I am doing myself, but I have to collect all the data that I then give, and quite frequently I have to explain things to the individuals at RISA. I also have been finding out piecemeal, I guess I would say, because I have no one there to ask questions about how our benefit platform works. We do have a consultant. I have been trying to work with them to find out information as questions are asked to me specifically. I could give you, I won't go and bore you with it, but
I'm just asking from the standpoint of the day-to-day in terms of HR, when you separate out
dealing with that
human
too.
resources from the payroll department.
I'm dealing with all of it.
So I'm just trying, we have a payroll person. And once we have that payroll person, I think a lot of what you're doing as it relates to payroll, doing the spreadsheets and sending those over to EduStaff actually flip into the payroll department.
That is correct.
Not as that being part of the day-to-day job description.
Correct.
There is some portion of that when you bring on new hires that will be done in the HR department and then sent over and it's really like out of that hand. I'm looking at that piece as being part of that job description to where it still looks like a broad piece there once we fill that payroll position.
Yeah, there's still a lot to do, and that's why I keep pretty busy.
Ms. Kennard, did you have anything?
No,
Okay.
I'm just amazed at the fact that, I have to commend you, really.
Yeah, I mean, that's, yeah.
And
Yeah,
so,
I mean-
Well,
you
let me-
know, we
I
knew.
can tell you this, that I have had preparation to some extent, in that I was the assistant superintendent for 2 years, and the district I was in, which is a little bit larger than this one, but not much. Not only was I HR, but I was also school improvement. I was also curriculum director for a brief period of time, hopefully similar to this. I was over payroll. So I have had some experience background-wise in trying to multitask. I will say I'm older and I don't always remember things as long as I wish that I could. So I have to go back and research some things again sometimes. But apart from that, yes, I'm keeping busy.
But we're fortunate to have you. Thank you
Yes.
very much.
Thank you
Okay?
very much, yes, thank you.
Thank you.
Seeing no further discussion, all in favor, say aye.
Aye.
Aye. Those opposed, nay. Motion carries unanimously.
Madam President, recommended motion. Move that the Board of Education approve the posting for a vacancy of an Operations Technology Administrative Assistant, granting permission to publish the posting. The presented job posting vacancy announcement is submitted for the board consideration. We are seeking board approval to post the new position. There's no dollar amount, but it's $45,000 to $50,000. Budget implications is general fund. The exhibits is in the board packet.
Moved by Kennard, is there support?
Wester for discussion.
Are you supporting?
Yes.
The floor will be open
Yes,
for
I
discussion.
did all right.
Okay, the motion is moved by Kennard, supported by Wester. The floor is open for discussion. Ms. Wester?
Salary range. As Ms. Kennard said, we need a salary range. It's not put on the motion, but I see it on the posting. And I thought it was voted on back in the summer with the board policies, that any new position that was going into central office had to come to the board for approval before it got posted.
That's what this is. We're not hiring an employee. This is an action item for the board to approve this position to be posted.
May I comment?
Yes.
I wrote the job description up as a posting, so that in anticipation that if the board did approve it, we could post it tomorrow.
Thank you, Mr. Clark.
Thank you.
Thank
Yes,
you,
and we
Mr. Scott,
would
for
need
clarity.
this, Mr. Scott, in order to approve the position. So this is exactly what we need. Thank
Okay.
you.
And I apologize if there was no salary range on what you were looking at.
Yeah.
Okay.
The
It's
motion
normally
is
on the
to
motion.
post, the motion
Yeah.
is to post
Yeah.
the position, and the salary range is in the posting, so we're fine. Are there any other questions? Oh, I'm sorry, Ms. Wester, are you not
I was going
fine?
by the same thing in terms of rationale,
Okay,
that it was not on the action item, so it wasn't there. So that's why I asked about the salary range. It's on the posting, but it wasn't on the action item like the previous one, is why I asked the question.
right,
Right.
because the motion is to post it, and the exhibits are the posting, which has the salary.
Let me clarify what she's saying. She is
Thank you,
saying,
Ms. Kennard.
she is saying in the original posting, in the rationale, the salary amount is not included. But I read it with the salary amount in it. So
Right.
just for clarification, the rationale is the presented job posting vacancy announcement is submitted for board consideration. We are seeking board approval to post the new position at a salary of $45,000 to $50,000 K. So that's all
Right,
she was
correct.
saying,
Right.
Madam President.
Right, and just so board members remember, exhibits are stated on the motion sheet, but when they're contracts, they're not read in motions. So I do have a question on this, Mr. Scott, because we approved an HR administrative assistant at the same salary range, and we just talked about the high level of expertise that will be required and the duties that they will be performing. And then this is different, but in the same salary range. So can you speak to that, please?
I will say this, a person who does this is going to have pretty good skills due to the fact of the variety of things that both of the directors expect. If you look at one, it has a lot to do with procurement. The other one has a lot to do, well, if you look right now at the job that Mr. Cooper does, he's doing all grants with no assistance at this point. He is also doing all of the IT. He has employees that he has to schedule. He has to oversee them, do evaluations. So he definitely needs someone who can help and assist with all of these types of things that are going on.
Thank you.
I'm looking at the qualifications. And with the type of work, and for what I know what procurement is about, because that's my expertise in the area in which I manage, and some of the responsibilities, and what I think I know and have observed and what's needed for this district, I think the qualifications should be higher than a high school degree, high school diploma. I think with the salary range that we're looking at, we should be more compatible so that we can attract qualified candidates for the position and hope and to retain.
Yes.
Okay, so we're not looking for what this district needs right now is not entry level. We need someone who, as you said, is not so much a seasoned, but is positioning themselves. So they're looking at staying with us and meeting that potential growth, okay, in terms of what we need. And so I think we need to go back. My recommendation and my suggestion is that we change some of the qualification where we can attract more solid candidates, with their expertise in terms of what this district needs.
Agreed.
Yes, thank you for that, Ms. Kennard, because the same salary range for the administrative assistant for you, we're looking for a bachelor's degree. And this salary range is also commensurate with our executive administrative assistant who has a master's degree. So if somebody wants to amend the motion to change that language in the job posting to have a minimum of a bachelor's degree?
No, it doesn't necessarily have to be in the motion, because in the rationale of the motion, it doesn't say any of this.
No, I'm talking about if you want to change the language in the posting, or if you want to state on the record that the...
Yeah, we could state on the record
Okay.
and allow
We'll make the
allow him
change.
to do his
Okay,
due diligence
thank you.
as the administrator. We're
Thank
just
you.
making a suggestion. I'm just making a suggestion.
I would agree with you.
Okay, thank you.
Thank you for that. Are there any other questions?
I do have a question.
Yes.
In regards to the Director of Technology and Operations, and it is similar to the HR, when I look at these and I hear what Mr. Scott is saying is that he's looking for someone with experience to go into a director's position. So I'm thinking that 45,000 to 52,000 compared to the same thing for this, it just doesn't seem fair for that person that's going to come in and to take over as the human resource director. So I'm wondering if that's something.
Yeah, exactly. See what we get, and if we need to have a discussion on increasing the HR assistant or potential future director, we can. But this is aligned with what we are hiring. Okay, so the current administrative assistants, we have one that we did a contract for at our last meeting when she took on pupil accounting. We have the administrative assistant we hired in August at the salary that I stated earlier. We have, who's the other administrative assistant? So the administrative assistant salaries are aligned for this position for, I'm tech and business operations. this salary is very much in line with the current administrative assistant salaries. The one that is low is the HR.
Well, I'm wondering then if, I know we're kind of going backward, but I'm wondering if the HR assistant should be more of an assistant, rather than an administrative assistant, is it an HR assistant?
Or,
And, I don't mean to go backward, but if we're going to hire someone to take on the HR position eventually, why would we not hire an HR trainee?
or possibly HR coordinator, generalist.
Okay, so I would like to remind board members, and we can always come back to this, but right now there's a motion on the floor for the administrative assistant for technology
Correct, I apologize.
and business operations. No, it's fine. We are thinking, but right now, if we can take care of the motion on the floor and limit the discussion to only that motion, please.
Thank you.
Are there any other questions for this position for administrative assistant for technology and operations? Seeing none, all in favor say aye.
Aye.
Those opposed, nay.
It's gonna be aye with the recommended changes that we
Right.
stated. We need to put that on the record. Thank you.
Are you an aye?
Yes.
Those opposed say nay. Motion carries unanimously. And Mr. Scott, if you could maybe contact members of the Personnel Committee and talk about the HR administrative assistant, and if that needs to be tweaked, and we've approved for this to be posted, so if you would like to post and see what we get, but if the Personnel Committee and you feel that we need to make those adjustments, then we'll bring that back to the board, if that is okay.
That's fine with me.
Mr. Chairman, are you, is that okay? Okay.
I
Thank
had thought about changing the title, but I had heard about the history, and I didn't want to bring something back up again that the board had not been positive with in the past. And I was kind of leery of changing the title, period. It's just because someone had suggested a couple of different titles. But I thought, let's keep it the way it is, with you understanding what the intent
Yes.
is with this. Okay.
Yes. Yes.
Right.
Yeah. Yes. It might be an executive administrative assistant.
Yeah, I would say that's an administrative
Yeah.
function, but I also want you guys to keep in mind that this is an initial training. This person is going to matriculate as the assignments go into the position, which means at some point, then it can be revisited and we can make
Right.
whatever adjustments that we can make at that time.
Exactly.
So when the person's in training, coming in, at this particular scope, okay, then we can revisit that.
Yeah, but I would just say,
Yeah, that
in
was a good-
regards to,
Yeah.
just being an assistant, HR assistant is something totally different
Yes.
from
Sure.
going into something like that and what we're working towards. So that's
Yeah.
all I'm just saying. And I appreciate your transparency, Mr.
Yes,
Scott.
thank you,
honestly.
Mr. Scott. And that is our hope, but there's no guarantee that the person who gets hired would end up being what the district's looking for as a director, so we can revisit that. Thank you. We have an action item for the resignation of the Director of Special Services, but in with this, and I apologize, Ms. Watkins, that you are not on the, your name isn't listed, but if you, before we get to this, could just talk to us about special services and as far as it relates to human resources and training, and yes, and training, right. The floor is yours.
Okay, good evening. So I was not going to talk specifically about special ed, but since we're here, we're going to talk a little bit about the training that we have planned for special ed and the district. And so we are looking at CPI training. I'm sorry, can you guys hear me now? We're looking at CPI training for the district. And CPI stands for Crisis Prevention Intervention. And we want to have that for our district, for students to be able to de-escalate, for staff to be able to de-escalate students and help our students get back on track behaviorally, but also be able to be certified to help students be safe and to keep staff and students safe. And so currently, we're working with CPI to have them come in and train 7 teachers or staff as trainers. And then they will in turn train the rest of the district so that we're all certified in CPI, which is nonviolent crisis intervention. So what we want to do is we want to be able to take students, help them with their trauma, help them if they have disabilities, and then, excuse me, help them to overcome those things and get back into class and get back to learning. We're looking at this for the beginning of April, and we are going to be training staff April through June, and the certifications last for 1 year. Trainers are certified for 2 years to teach students, to teach teachers how to live calmly and how to deal with some of the trauma that's happening with students throughout the district. So that's one of the initiatives of special ed currently. I can also get you a presentation so that you can have more information on CPI training. All right. Sorry I wasn't prepared.
No, that's perfect. That's
but I
exactly
will
what
get
we
you more information next time.
Thank
Then
you.
I'll save my questions then for next time.
Well, you can ask me some questions now. You can go ahead.
Okay, so the training, is it gonna, how would it affect, the teachers' instructional time during the day for the training? Is this during the day, work day, after?
So
or
it
how-
will be during the workday, and we're going to choose specific people out of each building so that we'll have a trainer in each building. And we're going to be strategic in choosing those people. So we won't necessarily choose teachers who will be out of the classroom all week, but we may choose an assistant principal. We may choose a learning specialist, someone who's vested in the district, someone who will be here and able to train us for the next 2 years.
And so this training, is it sessions? Is it, what is the sessions? Is it
So a little bit about the training.
yeah.
So the train-the-trainer model is a 1-week training session. We're actually going to have the CPI staff come to us and train us within our own district. And what will happen is 1 day is virtual. So everyone will be prepped. We will do a virtual session, and that can be done in any building. The next 4 days are hands-on. First day is de-escalation, and then followed by physical takedown skills so that we're not hurting students if we ever have to put hands on them as a last resort. And so it's a consecutive week-long training. And so each day you'll have an agenda, you'll have a specific segment that you'll learn. And 1 day is actually how do you teach others the CPI skills. So those trainers will be within the district, and they'll be able to teach for 2 years. So we'll get our money's worth in that. We're going to be able to train staff and give them a blue card showing that they're certified in CPI.
Thank you very much.
Okay. Any other questions?
Is this a training that a lot of districts do, and is it something that has a high turnout?
So it's, this is a training that most districts do. It allows us to be legally protected if we ever had to put our hands on a child for whatever reason, to keep them safe or to keep the staff safe. And it's such in high demand, we couldn't find any trainings around right now. All of the districts are requiring it for their staff, and we used to have it in Romulus. Back in 2015, the staff was trained, but all of our trainings have expired. So right now, we're unprotected, and we all need more training. And if we do it within our district, we will have it firsthand, and we'll be able to call upon it for new staff, for staff that leave, and then as also for refreshers, because we will forget, but we'll be able to call on some of those trainers. And we will have, again, 7 trainers within the district.
Great. Thank you for recognizing the need. And then when you found out that all of these scheduled trainings are full, for going beyond and taking the initiative to bring the training here
Yeah.
to Romulus. Thank you for that.
Absolutely. And just as a side note, we will also be training all of the ambassadors.
Wonderful.
So that they are skilled
Wonderful.
in de-escalation of our students.
Thank you. Thank you for that.
All right.
I mean, we have to move.
Well, I can speak to that. Bus
Yes,
drivers and bus
They
aides
have their
actually have gotten the training from Auxilio already, so they're a little bit ahead of the game because they have training from their employer, and now we want to get training from ours. Yes, they will be, they are Blue Card certified. Yes, that was the question, and we just need to be Blue Card certified.
Yes.
And in order to get our students and staff certified, this is just initial, but it's very cost effective because we take refreshers, and after 2 years, our trainers can go and get retrained as trainers again for a nominal fee, and then we just kind of start the cycle all over.
Yes, yes. Ms. Tenney, thank you for your excellent question. Well, I think she asked if bus drivers would be trained. Next, the other item of business for special services is a resignation. Is there a motion?
Madam President, recommend motion, move that the Board of Education approve the resignation of Angela Broughton, Director of Special Services for Romulus Community Schools, effective February 10th, 2022. The rationale is routine personnel action, no budget implications, and no exhibits.
Support.
Moved by Kennard, supported by Wester. Any questions? Seeing none, all in favor, please say aye.
Aye.
Aye. Those opposed, say nay. Motion carries unanimously. Due to time, and since we are going to have a couple study sessions this month, the next item on the agenda is unfinished business, FYI for hoop houses. If there's any board member that wishes to discuss this now, we absolutely will. But if it pleases the board to move this to a study session, any opposed to moving on? Okay. So before we get to the report of the board president and finish, I'd like to ask Mr. Henry to please take the floor. No, it's.
Good evening, board. It is with great sadness that we announce the unexpected passing of one of our Romulus High School students. We were informed of that this morning right before we started our cabinet meeting, and the family was in contact with the principal of the school. And so a plan, a support and grief plan has been put together to support our students starting tomorrow with our professionals internally in the district, also accompanied with the support of the Romulus Ministerial Alliance. A public statement is going forth, and so Mr. Petty has been in collaboration with Brad War for our communications consultant so that we can get that statement out. As we have details, we will share them, and also we're looking to have a unified effort of supporting the family, as I share with Mr. Petty today, not just piecemeal with the high school, but we want to put forth a collective effort from the district.
Thank you, Mr. Henry. Report of the board president. I have nothing to report. Communications from board members. Ms. Terrell. Could you use your mic, please?
I think that's it. Okay. So I were allowed to attend some MASB training over this past weekend, and I learned, was able to get a great deal of knowledge from those sessions. I did not have an opportunity to take advantage of the tours for the Meta Labs, but I did, however, take some classes with some of the Harper Woods staff, which gave me a lot of feedback on that. So I am excited to hear that a great deal of our staff and individuals were able to go and get more information on that. And then the only other thing I wanted to say is with this audit, again, I'm glad that we were able to get the audit completed, and just really not surprised by the findings. This has been a repeat, and I hope that we are able to move beyond the same findings year after year in order to make sure that there is a future for our district. And last thing is, I'd like to thank Mr. Scott for all of his hard work taking on the multiple roles as the HR director. It had been presented in the past that salary increases were necessary in order to maintain and attract people that were going to stay here. So I'd like to really thank you for your efforts, trying to be cognizant of the fact that we've had some tension, but yet addressing the issue and trying to move forward. And that's it.
Thank you. Ms. German? Ms. Wester?
I also, too, want to thank Mr. Scott for his hard work. I know what it entails to do HR and payroll. That's why I was asking the questions when we came across that. I didn't get a chance to go on the tour of the Meta Lab. I heard it was really nice. Hopefully I can make it over to River Rouge, depending on the time framing for next week. Really just thanking everyone for coming out and supporting our kids. Ms. Watkins bringing up the CPI training, which is good, you know, to learn how to de-escalate and make sure our kids are safe. And to thank Mr. Henry for letting us know this information about one of our own students and just keeping the family in prayer during this time. Thank you all.
Thank you. Ms. Evetts?
I don't have anything.
Thank you. Ms. Kennard?
Okay, I would like to give my condolences to the family and thank Mr. Henry for bringing that to our attention. It's definitely saddening when we lose one of our own, and we feel very much for the family. We will do what we can, you know, as a district. We got a lot of information today. I'd like to let everyone know in the audience, as well as anyone who's listening, that we got a lot of financial reports. We were debriefed prior to the board meeting, and we got the single audit compliance and so on and so forth. There's a lot of work that needs to be done. The report, in terms of the rollover budget from year to year, has allowed us not to be able to do our fiduciary responsibilities in the way that we should, in the way that we know or not know, or it gives us a starting point to know where we should be moving for the district in the future in terms of what those things should be. And so we're going to be having some extensive conversations and study sessions, I would think, forthcoming that'll get us started. I'm not going to go into some of my greatest concerns. I think when the Finance Committee sits down and have a conversation with our financial director and bringing those informations back to the board for consideration and some suggestions, I think it's imperative that we take those necessary steps moving forward so we are not in the same condition or spot in terms of where we are now. We understand that we didn't get here in 1 year, 2 year, 3 year, whatever, but it's a compound of what has happened over a continuation of years, but then focusing on some of the things that need to be done immediately in order for us to not have or be not aware of, we as a board must take some necessary and get greater understanding of the fiduciary responsibilities in terms of what we have to do. I say all of this because I'm not foreign to those types of practices, okay? It is something that we need to clear up and things that we need to ask and receive on a regular basis. Mr. Scott, for your human resources role, I do understand, you know, and know that the different aspects of how human resources intertwine with financial, procurement, and so on and so forth. At some point, they do intertwine and mix. And so those are greater responsibilities and that this district should be addressing, that we would do our due diligence as a board to be mindful of what was needed and see what we can do for that. The Meadow Labs, when we first heard about the Meadow Labs and the understanding, I immediately addressed and could align Meadow Labs with matriculating from grade level to high school into CTE and on and so forth. So there was a connection. So there is a lot of information that we look forward to seeing and getting greater understanding of that. Basically, what I'm saying to my board, as being a board member, is that we are looking at a great deal of information that's going to require a lot of focus and attention, okay, in order for us to be able to provide the type of instructional support so that our students can receive a quality education. As I've always said, from the day that I was appointed to the board and then elected to the board, is that every student in Romulus community deserves a quality education regardless of what their needs are. Right. And I still believe in that. That's what I stood for, and that's why I was appointed, and that's why I ran. And that's all I have to say.
Thank you, Ms. Kennard. Thank you, everybody, for all the information tonight. There's a lot to process and a lot to do. During board member comments at our last meeting, coincidentally enough, I talked about how we assume we will have a whole lifetime with our own children and that we will have K through 12 with our students. And we never know how much time. That we will have our children. But what we do know is that we have them today, and we are charged with the highest level of responsibility and accountability for what we do with that time. I do not yet know the name of the student that it's no longer with us. But all of this stuff we do, our students can't wait. Our students can't wait for us to get along. Our students can't wait for us to like each other. Our students can't wait for adults to stop fighting. Today, we have one responsibility. It is to take our data and have an equitable allocation of resources that meets our students' needs. Because in public education, education is not our mission, it is our avenue. In public education, we are saving the lives of children. Or we're just too busy to realize that. My heart is grieved for this family. There is no redos. And when a child dies and a family buries their child, it forever changes every single person who knew that child, their family members, and I am broken for what our high school students will experience. This hurts, but as we look at our data, as we look at our scores, And as we have $13 million worth of ESSER 3 funds coming in, I encourage us all to set aside any differences we have and remember that we have one objective we all agree on, and that's our students. And we need to be aware of what they need and get them what they need while we still can. Motion to adjourn.
Support.
All in favor, say aye.
Aye.
Aye. Those opposed, say nay. Meeting adjourned at 8:28.